Uh, can anyone see my screen?
Yep, can see.
Okay, so I'll talk about the our portfolio update first. I'll talk about Alibaba. So recently they released their Q4 23 earnings, and apparently the earnings actually rose by 2% year on year, and they actually beats the earning estimates. And primarily it's due to few things. For example, for the China commerce, their GM, the online their revenue turns into positive as China's consumption actually gradually recovered. Um, and in the international commerce segment, there's this LA.me, or basically like is like the catering services, and is getting higher. And for the cloud service, there's like a little bit of drop in the revenue. But all in all, it caused an increase in the revenue. But even though they kind of like beat their earnings estimates, they actually have like a little bit of drop in share price. I'll talk about that later. Um, Another thing that is being kind of like discussed a lot in the earnings release is the IPO. So basically, maybe if you all have heard of it, during the past few months, there's actually news about like Alibaba splitting their business into different companies and going for IPOs into their business line too. And in this specific earnings release, they kind of like solidifies their plan, and they mentioned that it can start as early as 6 months and goes to up to 80 months on their plans. So the most concrete plan is actually for the Alibaba International Digital Commerce, which is basically their holdings company for a lot of e-commerce companies like Lazada and some other companies, and they expect it to they expect the IPO to be within next 12 and 18 months, and the main cash usage, like main fund usage, will be expanding to overseas market. And they specifically mention about for example, like European and Middle East market, for example. So they're trying to on top of solidifying the positions, or maybe Southeast Asia or existing market, they're trying to tap into those unreached market. So they also mentioned about like Turkey, where they trying to kind of like expand there also. And another thing is their board of directors approves spin-offs of cloud intelligence, and and the approval of IPOs of two business line, which is Free or the retail chain, and also this China smart logistics, which is basically the logistics. Although they are trying to like encourage fundraisings on all of their business units, they said that they will be less aggressive or likely to hold on. Actually, they never like specify what this specific phrase mean, like likely to hold on. But basically, they say they will hold on to their cloud or AI business and e-commerce operations. And also, moving next, yeah. So as I mentioned, even though their earnings actually beat sell side consensus estimates, their stock is a little bit down, around like 11%, which can be tied into market sentiments toward China's economy right now. So even though China's GDP, according to the last report, is increasing, um, the manufacturing data seems like little bit weak, and is accompanied with a relatively high rate of unemployment of around 20%, especially on the youth sectors. And it causes like people in the market things like, even though China's market is growing, it is kind of like showing signs of uh, slow growth rate moving forward. And also there are like a lot of like geopolitical fears about like regulatory issues in China, and yeah, that basically fuels a lot of things in China's tech market. And actually, strength is not only observable in Alibaba, but also it peers like Pinduoduo or JD.com. And but um, we still do think that our long-term thesis on Alibaba still remains. And yeah, this kind of like fears will and uncertainties will get better moving forward. And we still being optimistic about their opportunity through the series of IPOs, basically. Yeah, I'll pass my time to yeah, just to talk about Alphabet on Google.
Yeah, thanks, Fernando. So now I'll be just going through some Google updates. So from the I/O 2023 key announcements, on the hardware side, Google's first full phone, the Pixel phone was announced. So this is like going to be some sort of a competitor against the Samsung Fold. And then under the software side, there's Palm 2, which is Google's newest large language model. So this will really help to act as the foundation model for most of the new AI features that the company is going to roll out over the next few years. And I think something that everybody is actually quite excited about is also Google is finally removing its waitlist for Bard. So Bard is basically a ChatGPT competitor. Um, yeah, and it's going to launch support for Japanese and Korean languages, as well as up to 40 languages in the near future. So I mean, over the past 1 month, Google stock has rallied about 16%, and we really attribute this to the entire AI wave and also a general upwards re-rating of US equities. Yeah, and our initial thesis in Google actually revolve around its severe undervaluation as a market leader, and we continue to believe that this remains the case, and even more so right now because of the further optionality of Google's AI ventures. Yeah, so that's all from us, and if there's any questions, we'll be happy to answer them.
Thank you. Is there any questions? Okay, thanks, Team 1. Move on to Team 2.
Okay, give me a sec. Let me share my screen. Okay. My screen is visible, right?
Yeah, visible.
Okay, thanks, Surya. So for Team 2, very great news. Our portfolio has been up by about 20.76%. Yeah, so as of last closing, Meta's share price was at $262 per share. Yeah, so as you can see, tracking from the past few months, it's been up quite significantly, which is great news. Yeah. So I think the biggest news for Meta would essentially be that they are currently having their last batch of a 3-part round of layoffs as of last Wednesday, to eliminate another 10,000 roles. And the cuts have hit non-engineering roles most heavily because Zuckerberg has said that he wants to reinforce the primacy of those who write code at Meta and improve the ratio of engineers to non-engineers in the firm. So dozens of employees working in teams like marketing, site security, enterprise engineering, etc., they took to LinkedIn to announce that they were laid off, which lines up with what he's been mentioning. Yeah. So as you can see, who is considered important in Meta at this point in time. Yeah. So the social media giant also cut employees from its units focused on privacy and integrity, according to these LinkedIn posts. And despite the cost cuts, Meta is still heavily invested into Metaverse and its Reality Labs unit, which is developing virtual reality and augmented reality technologies. They actually logged the 3.99 billion operating loss, but they generated 339 million in sales in its first quarter. So why I mentioned the fact that they have been reducing its staff members from departments like privacy and integrity, I mean, it leads on to this next point that they've been recently fined. So they were hit with an $1.2 billion fine for breaching the European Union's GDPR. So apart from the 1.2 billion fine, it was determined that Meta should stop transferring any personal EEA, so European Economic Area citizen data, to the US within 5 months, and to ensure that these data is within the US is compliant with the GDPR within 6 months. So a worst case scenario for Meta is that not only do they have to pay the fine, but they have to address the large volume of EEA user data held on US servers while establishing a fully EU-based infrastructure to deliver Facebook functionality. So this is a Herculean task, to say the least, for Meta, even though it's such a huge organization. And that concludes Team 2's portfolio update. Yeah.
Does anyone have any questions for Meta? All right, then we can move on to Team 3. Thank you.
Thank you, Surya.
Hi. For team 3, I will share my screen.
Okay, I'll give you 4 seconds.
Okay, so this is our portfolio update for May. So currently we are at a negative 4.2% with a portfolio value of 9,500. For Darko, the latest update is that their sales volume has increased, and so sales volume has increased and production volume has increased, which is a good thing, means demand is increasing, but the average selling price has decreased. This is because one of their main users of the polysilicon chips for solar panels, they are facing a supply constraint in another material that is also needed for the solar panels. So as a result, the production of solar wafers is decreasing. That's why the demand for polysilicon, the average selling price for polysilicon has decreased because there's slightly weakening demand, but overall sales volume has increased despite the average selling price going down. For Adobe, I'll pass the time on to Pauline.
Yeah. Hello. For Adobe, as previously mentioned, it did really well in Q1 with really strong groundbreaking revenues. However, I think we're still really concerned about 2 key issues. So it still remains the same few issues. So the first is the acquisition of Figma. Previously, the US started hunting Adobe down about this acquisition, and then now it's the UK's turn. So just start of this month, the UK antitrust regulator, CMA, actually started an inquiry of Adobe's acquisition of Figma, and we will only know the results of this in June. And also there isn't any concrete conclusion yet from the US side. So we still remain really uncertain about whether Figma would be successfully acquired. We will do a bit more in-depth analysis of this later on. And then the second part would be them releasing new AI product features. So they have been updating their products regularly. Since the last update, we also shared about this. But I think the more interesting thing now is that they're really leaping into the AI trend. So for instance, most recently, they actually updated their Photoshop with this Firefly art generator, which is basically like, so let's say if you have a background, right, you can type the words like, oh, I want to have a picture of a bar, and then like they would just automatically change into a photo based on whatever that you generate using text. Generally, it's a great leap forward for Adobe, and we're quite positive about this, but I actually checked the reviews from users, and there are still quite a bit of bad comments about this. Like users are quite disappointed because they say that, for instance, the photos that are generated still have watermarks, and it's still not as well developed, not as versatile compared to some existing AI photo editors. So we think this is a good first step, but we need to continue to see how Adobe develops. Maybe we could move on to the next slide. Yeah, so just a bit more of an in-depth analysis of the merger. So currently the losses that have already been incurred by Adobe is definitely the opportunity cost, because it's a 20 billion deal. They actually have to make sure they have the amount of cash and stocks to spend to acquire Figma. And because this entire acquisition is put on hold, it's an opportunity cost because they can't use this amount of money on other investments. And they have also wasted all their resources because they did not actually check with the regulators in advance. So they went ahead with all the due diligence, the labor, the expenses on that. And now, even when they are actually being investigated by regulators, they actually have to pay fees for that. So for instance, CMA, the UK regulator, they have to pay them estimated of around £160, 160k pounds. Yeah, so I think these are some current losses that are already incurred by Adobe at the moment. So we now have 2 key scenarios, whether the acquisition goes through or whether it gets vetoed and does not go through. If it goes through, it doesn't seem like a very bright scenario as well, because they have to execute a 20 billion deal. which is around 50 times the revenue of Figma in 2022. And because they don't have sufficient cash, they actually have to use stock as well to pay for this, which could actually result in dilution of us as shareholders. And because the current interest rate for debt is not very favorable as well, so they might end up incurring long-term debt to make up for the lack of cash, the unfavorable rate. So this is something that we're quite concerned about. Previously, when we shared about this a few months ago, we said that we believe that maybe Adobe, after all these years of good management, maybe they have some hidden reason that we don't know about, that they choose to acquire Figma at such a high price. But as of now, after a few months, we still don't see any hidden reason coming out. We still don't see why this is the case. So we are quite hesitant about Adobe at this stage. If we look at the other possibility, which is that if the acquisition gets vetoed and does not go through, in this case, Adobe would have to pay Figma a 1 billion termination fee and also bear reputational costs. So that is not a very good result as well. But compared to maybe the first scenario, some might feel that this is good news because many felt that Adobe actually overvalued Figma, which explains why the entire stock price just crashed when they first announced this acquisition. So currently, the second possibility seems higher given the overall stronger stance against anti-competitive practices in today's climate. So for instance, we know in 2021, Biden actually shared that his entire presidency, he would really want to clamp down on such antitrust issues. So if the second scenario takes place, I think we will be slightly more positive towards Adobe. So at the moment, we're just going to hold Adobe first and wait for the results next month to see what the UK regulator decides. Yeah. Thank you.
Yep. So I'll take over for GDS. In terms of the first quarter, they just announced the results. Largely, it was positive with increases to revenue as well as commitment rates, which is in line with GDS's strategy for moving forward. In terms of that, part of their strategy includes actually becoming more prudent, where they actually want to cap the total amount of net debt to about 5 times ratio to their adjusted EBITDA, as well as cutting annual capex to about 2 billion from the current amount of 3 billion. This largely comes in line with GDS's strategy, which we outlined in the previous month, being that they now want to actually increase the amount of total utilization in their existing areas within service and stop spending as much on creating new operational areas. This is also seen through their latest areas in construction, which were both 100% filled up in their pre-commitment rates, one being in China and the other being in Johor. In terms of their strategy, the quarterly results also kind of reaffirm that they will be maximizing their existing assets within China, but they're also starting to pay more attention to their international market, particularly in Johor, which will be their first database within Southeast Asia. Primarily, they plan to actually publish or finish up 4 databases in Johor by about the third quarter of 2023. And this is roughly about more than half of the new commitments that they actually garnered for this first quarter, as well as they've also set guidance and targets in terms of how much they expect their international business to contribute to their overall parent company, which is about 10% contributions to their EBITDA within a 3-year target. Currently, we will still reassess the position for GDS, given that our initial thesis favored heavily on the fact that they would continue to expand their foothold within China and particularly tier 1 cities. So we're still not too sure whether or not they will be actually able to successfully capture the market outside of China and particularly in Southeast Asia. Yeah. Next slide. Yeah. For American Waterworks, not much development since the last update. Primarily, they have actually entered agreements to purchase one waste system in Pennsylvania, as well as one water treatment plant in Illinois. This currently amounts to about over 60% of their new customer connections pipelined for the first quarter of 2023. We believe that this kind of largely falls in line with the initial thesis, being that they are able to continue entering more agreements with municipals and actually charging rates once they get the regulatory approval as well. Yeah, that's about it.
Thanks, Team 3. Does anyone have any questions? Yeah, I'd just like to check whether are you guys interested to double down your position in GDS? Because yes, it is reduced to a certain amount, and if it's really a quality business, then perhaps you guys may think of doubling down? No, just a question. If you guys have an answer.
Currently, we haven't discussed about doubling down, given that I think just a month or so ago, we actually cut our positions because of the fact that they were pivoting out of China.
I see.
So yeah, we haven't really assessed thoroughly about whether or not we should change the thesis to fit that international stance. But we will reassess the remaining position in terms of like whether we still believe in our original China thesis.
So I just want to ask, why moving towards international is out of your strategy, or because I don't know, like you wanna know your reasoning?
Yeah. So part of the original reason for the China thesis was that given their predominant hold over tier 1 cities, they're actually able to get better customers and charge better rates compared to their competitors who primarily only operated in tier 2 and 3 cities. So we're not really sure whether they can maintain, firstly, the margins and also their energy utilization rates, which are both modes that they have in China because of the fact that because of the geography of the land that they have, as well as the expertise they have in those markets.
I see. Okay, got it.
Yeah.
Thanks, John. Does anyone any else other questions? If not, I think we can proceed to team 4.
Okay, let me share my screen. Can you all see my screen?
Yep.
Okay. So I think quick update. So we have Unity and Darko in the portfolio. I think there are individual movements to the two stocks. I will focus on Unity this time around because last week Troy gave an update about Darko's earning report already. So for Unity, the Q1 2023 earnings came in about mid-May. I think there were pretty good news in the sense the revenue, they hit 500 mil, which exceeded analyst expectations. And if you look at the trend, the revenue has been steadily growing, even though they're still at net loss. So earlier in March, their shares, we reported their shares dipped quite a bit because they gave a conservative FY23 guidance, but since they have reviewed 2023 Q1 revenue, they have also increased their expectations by 30 million on the lower end. So that gives investors quite a bit of confidence, and the stock price actually increased by 11% after the announcement. So if you look at the breakdown of what contributed, the two main components of their revenue, right? One is Create Solutions, where it's really Unity's game development systems and strategic partnership. That clocked 187 million revenue in Q1, and that's a 14% increase year on year. As for their Growth Solutions, which provides analytics and monetization tools, that's 313 million and 101% year-on-year increase. So the Growth solution increased quite a bit, especially after the recent merger with Iron Source in November 2022. So we can look a bit into some of the factors that have boosted their results for Q1 2023, as well as what we think are key drivers for sustained sort of optimism into the year. So I think specific to the games industry where they are which makes up quite a bit of their portfolio. So one key driver is how they have reported smooth integration with ironSource by leveraging each other's strengths. So recap, as I mentioned, ironSource, they merged with Unity in November 2022. They are an Israeli software company that focus on app monetization and distribution, hence contributing quite a bit to the Grow solution. So they have managed to integrate some of ironSource ads network into Unity's AI and machine learning models, while they are also adopting ironSource bidding models. So that will affect how Unity price and allow them to price in a sharper manner. And then two, specific to games as well, they have built some pretty strong partnerships in Q1. So there's Outfit 7, which is the company that owns the Talking Tom and Friends brand. Then there's also the Marvel Snap. So I think part of our original investment thesis is also how Unity is actively looking into diversifying into other industries that might have needs for real-time 3D capabilities, such as architecture, automobile. So the idea is you use Unity's engine to develop a digital twin, i.e. a virtual simulation of your, let's say, manufacturing factory or car, and then you can do innovation or modeling on there. So the positive sign is there is increased interest and demand for digital twins and real-time 3D capabilities. Part of it could also be boosted by the recent hype about generative AI. But on Unity side, they're also actively launching new products such as the Unity Industry, which is meant to be an enterprise product, and customers across industries can use this product to build and deploy interactive real-time kind of models to help them optimize resources. And then if you take a look at the deals that they have closed in Q1, it also varies across industries. So you have healthcare at the Children's Hospital. You have for federal agencies, which is a bit more like cybersecurity and government related. And then there's also luxury watch manufacturers. So I think this is when we can start seeing the use of real-time 3D in a combination with AI in other industries. So that's a huge confidence booster. And then because of all the talk about generative AI in their recent earnings report, it's also quite a huge feature. So I think over here, I'll cover a bit about how Gen AI can help Unity and why they are well placed to reap the benefits. So I think very obviously, because of what Unity is doing as a game engine, Gen AI, incorporation of Gen AI can help to increase the productivity and ease of use of the development tools. So Unity, to begin with, if you compare it to Unreal Engine, it's a lot easier to use, low code, and which goes back to one of our original thesis about how it's democratizing game development. Or the use of technologies in the game industry. Now with Gen AI, or like think of ChatGPT, you can add on natural language to the professional deterministic tools. It actually increases the efficiency and the possibilities of content being created. So for developers, they can use like ChatGPT kind of natural language to do a draft of the kind of ideas they have in mind first before they use Unity's development tools to really map it out. So that will increase efficiency and productivity. The other interesting point that the CEO brought up was how, because of Gen AI, there could be a new revenue stream for Unity, which is more cloud and AI based. As all of us know, AI requires quite a bit of compute, and then quite a bit of it could be on cloud. So that is one other stream, that revenue stream that they're looking at and might be launching this year to as an additional revenue stream. So on their end, they have also built this thing called Barracuda. I'm not sure whether I'm pronouncing it correctly, but it essentially allows data science models to be trained locally on devices. So that gives creators and developers the best of both worlds. You can either run it on cloud and use server energy, or you can use their Barracuda and not worry about cloud compute costs. So there isn't much specifics about how they're going to price this, or who's more suitable for what. But I think we see it as a pretty good potential new potential revenue stream. And then so in terms of why we think they could benefit from Gen AI, and other than the fact that a lot of the existing tools can easily incorporate Gen AI because of the development aspects, image aspects, artistic aspects. They also have another critical advantage, which is the large data sets. So because they have been making it widely available from indie developers all the way to professional developers, they have quite a wide range of data sets. And their merger with Iron Source also brings about another large group of data sets. And these data sets is kind of crucial for AI models to run effectively. So they are in a good position to leverage Gen AI. This is my last slide, but I guess as a last mention, which I didn't put in the slides, in the Q1 earning report, they also mentioned that they are doing sort of like internal restructuring, and they will be laying off about 600 workers as part of the streamlining of operations. I think investors don't see it as a bad thing per se, because they have reported positive revenue. So these cost-cutting measures look more like measures to drive them towards productivity, which is in line with investors' concerns in today's tech market. Yeah, so I think that's all the update from our side.
Thank you. Does anyone have any questions? Okay, if not, Chiang and I got a few updates. So first thing is that recruitment for the third batch is going quite well. So after we changed it to a rolling basis, we have a total of 32 signups now. And we mainly changed it to rolling basis to cater to like SUSS students who are still having their examinations as of this week. So with that, we'll have 2 batches of like case studies and interviews. So the first batch of interviews are going to happen this week, and the next batch will be happening in the 3rd week of June. So if you all got anyone that are still interested, maybe you can let them know to sign up by the 1st week of June, because it's rolling basis, but we'll be closing off before that second round of interviews and case studies take place. Yeah. And next thing is that Shinya will be in town the whole of June. So Chiang has sent out a voting poll on the all EIP and VIP group in WeCom. So maybe you all can just log in now and cast your votes there for your availabilities. Yeah, while I just continue the updates. Then next thing is we'll be moving to Luck. So Luck is another platform. The main reason for the change is because we want a platform where everyone is like from both EIP and VIP programs are able to log in together. So like, because WeCom is banned in some countries like India. So Yang, maybe you can send the sign up link in the Telegram.
I will do that now.
Yeah, then yeah, so how it works is you just need to download the app on your phone and also desktop. Then using the link Yang sends, you all can just log in and register. Yeah, it's like our equivalent for like an all EIP VIP group. Yeah. And one last thing is the initial memo will be due end June. So yeah, if y'all got anything that y'all want to clarify in relation to it or need any assistance, do let us know early, so that it's not like extensions the last minute or anything like that. Yeah. So that's all from our end. Do you have any clarifications or anything to add? Okay, then yeah, just 2 things. Do vote on the all EIP VIP group for the bonding sessions, then can get started to move over to Luck as well. If you got any technical difficulties, do let us know. We can guide you as well. For everyone who's traveling over the summer, like have a safe trip, then those interning, all the best as well. Thanks, guys.